Good morning and welcome to the Killik and Co Market Update. We had some big intraday moves for US indices yesterday. Markets started the day in very negative territory and finished the day in very positive territory. And to be quite honest, many experts are really struggling to give a good reason for these moves. It's possible that many algorithmic trading systems kicked in when the markets got below a certain level, and that those systems started buying stock and pushing the market into positive territory. Yesterday was actually the fifth biggest intraday reversal that we've ever had for the S&P 500. The cause of the initial weakness for the market when it opened was the latest US inflation data, which came out for September. The inflation data was slightly higher than people expected, and that's led to expectations that interest rates in the US will need to rise more or more quickly than previously expected, and technically that would be bad news for markets. We can have a look at this inflation data in a bit more detail, and we can see the price moves for different categories of goods and services. And I've got a few examples on this slide here. So for example, airfares were up 42.9%. That will largely be due to the increased cost of fuel. Margarine was up 44%, and that's largely due to the increased cost of oils. And those two will be largely due to the situation in Ukraine. On the plus side, we have got quite a big decline in the price of smartphones. So that does suggest that some problems we've had with supply chains are finally starting to ease. In the last couple of videos, we've talked about the weakening in sterling that's taken place following the disastrous mini-budget that happened at the end of September. Sterling did strengthen again somewhat following the U-turn on the plan to abolish the additional rate of income tax. Here's a chart showing the 6-month movements of sterling against the dollar, and you can see that over the last couple of days, sterling has strengthened again, and that's due to rumours that Kwasi Kwarteng has flown back from Washington in order to have talks with Liz Truss about doing further U-turns on particular elements of that budget. We've also talked a lot in recent videos about the weakness in the government bond market, but it's also worth talking about weakness in the corporate bond market. Here we've got a chart showing an index that shows investment-grade corporate bonds, and it shows the yield on these bonds going all the way back to 1998. You can see that over the last few weeks, the yield has gone up above 7%, and that's territory that we have not seen since the financial crisis. So please do give us a call if you would like to talk about investing in bonds in a bit more detail. Many retailing stocks have been weak recently because consumers have been cutting back on spending. However, there have been some pockets of strength within the retailing market. For example, this week we had some strong results from the owner of Poundland, citing strong sales because many consumers have been trading down. We've also seen strength at the very opposite end of the scale in the luxury products market. This week we had some good results from LVMH, which is one of the largest luxury goods companies in the world. And here's a quote that we've taken from those results. LVMH, the world's largest leading luxury products group, recorded revenue of 56.5 billion euros in the first 9 months of 2022, up 28% compared to the same period of 2021. Europe, the United States and Japan, up sharply since the start of the year, benefited from the solid demand of local customers and the recovery in international travel. Asia, including China, saw a lower level of growth over the first 9 months of 2022, though growth in the latest quarter accelerated there due to the partial easing of health restrictions. Shares in LVMH have also performed well. Here's a chart showing how they've done against the benchmark French index, and you can see they have significantly outperformed over the last 10 years. So please do give us a call if you'd like to talk about this company in a bit more detail. Next week, we're very busy as we move into third quarter earnings season. We've got lots of companies reporting. We're looking ahead to results from Rio Tinto on Monday and then Goldman Sachs and Netflix on Tuesday. That's it from us. Enjoy the weekend, and we'll see you next Friday.